Jessica, we're going to keep looking at this and its impact on people's investments. We invite into the stream Katerina Simonetti, UBS Private Wealth Management Senior Portfolio Manager. She's joining us from Freeport, Maine, also home of LL Bean. But let's talk about what we can expect with our investments. One of the things you think, though, is that you're positive on the outlook for equities. But we keep hearing people say the tech stocks are what are driving, say, the S&P 500. Are you perhaps overly optimistic?
Adam, thank you for having me on the show. And of course, this has been, quite a volatile and unpredictable market. And when we look at the tech stocks specifically, they're following the stay-at-home narrative. And I can also make an argument that the driving force that is fueling this tech rally right now was there all along. What happened, it was amplified by the stay-at-home. It was amplified by quarantine. And we're using the e-commerce, we're using telemedicine, we're using those technological solutions that were there already a little bit more because of this current situation. But this is not to take away the emphasis and importance of the rest of the market. Tech is perhaps a little bit ahead of it, but as we're looking at the different scenarios of economic recovery, we expect all the other sectors to follow suit eventually, some faster than others.
Katerina, it's Julie here. And we also got the announcement today that the Fed was extending some of its relief programs through December. We just talked about the stimulus that's coming, hopefully, from the federal government, the next tranche. But for the markets, isn't the Fed stimulus in general more important? Or does Congress also need to pass its stimulus in order to keep fueling the rally that we've been seeing?
Julie, it's our opinion that both monetary and fiscal policies have to go hand in hand. They're both unbelievably important. And one of the reasons that we see this market recovering and holding as strong as it is because the unprecedented historical support of the market by Federal Reserve. But alone, without this strong, decisive, and meaningful fiscal stimulus, it's just not going to be enough.
Hey, it's Brian Chung here. So what are other asset class pricing telling you about where investors are thinking broadly right now? Because it's been interesting to watch the rally in gold, but at the same time, we've also seen bond yields come down quite a lot. So I guess what is the overarching thesis, despite the fact that the equity markets have continued to rally, for where people should be placing and kind of, I guess, dividing up their portfolio and making investments right now?
Well, there are so many sectors. The one good thing about this market is what volatility brings is also a tremendous amount of opportunity, especially this year. And I think one of the sectors that we're looking at for undeniable opportunities is healthcare, specifically with growth of telemedicine, specifically with the focus on the vaccine and treatment options that, would be a great solution for us as this COVID situation, hopefully is going to come to an end once the vaccine is available. And robotics, automation, we also believe that, specifically mid caps are presenting extremely attractive buying opportunities. So lots of great buys in this market for sure.
And how are the 2020 elections driving the market? There was actually a new survey by UBS released last week showing that 55% of wealthy investors and business owners expect Biden to win. So how is that impacting investors and the economy?
Well, that's the thing about the elections is that the outcomes are completely unpredictable. Let's just look at the last election. And as much as we, look at the numbers and try to analyze them, and we have scenarios for any outcome, we encourage investors to not vote with their investment portfolios and position portfolios in such a way that they could be strong enough to get through whatever the outcome of the election might be.
So, Katerina, we're going to have, say, January stabilization. We'll have either a re-elected president or a new president. We will have hopefully a vaccine or at least treatments that diminish the long-term negative consequences of COVID. How long do you expect gold prices to remain elevated? Would that be a short-term play for an investor right now?
Gold is an amazing story. And when you think about the curiosity of this year, and there's nothing this year has been normal, let's just start there. If you believe that the recovery is on the horizon, which we do, our base case scenario calls for that very gradual touch and go economic recovery, the gold has historically been positioned as the hedge. So a lot of people, a lot of investors that perhaps are cautiously optimistic about the prospects for economic recovery, just naturally, buy gold and add gold to their investment portfolios. But even if we believe that it's going to be a normal level of recovery, we believe that there is some strength still left in gold, fueled by the liquidity that central banks are pumping into the market, and also the fact that we're calling for the depreciation of the dollar. Eventually.
Okay, Katerina Simonetti joining us from Freeport, Maine on vacation, probably well-deserved. UBS Private Wealth Management Senior Portfolio Manager, thank you for being here.